wondered why the market always goes against you? Many times after you've bought a share, then share prices started to drop. Is it because that the market doesn't like you? How do we overcome this situation then? M Plus Wiz, which alerts on potential entry for trending stocks, might do the trick for you. Is that all for the Wiz feature? Not at all. To find out more, please visit us at mplusonline.com/wiz.
Okay. Hi, good afternoon, everyone. All right. Okay, it's an exciting night. Although the market is not really that great today. Okay. All right. Good afternoon, everyone. This is Elkie here today with you guys, and today I'm gonna share with you guys some ways to catch the bottom. So before I start my section today, can I do a really fast sound check? Can you guys hear me? All right. Inche Aru, good evening. Okay. All right. Okay. So basically today, what I'm gonna share with you guys is some of the methods that I use to identify and also catch the bottom when it happened in the market. Okay. All right. Yeah. Hi. Nice to meet you, Don. Okay, Dave. All right. Thank you very much, Dave. Andrew. Yep. Okay. So let's start today. Okay. So before I start today, all right. Okay. I think the topic just come just in time because yeah, we had not really a great day today. Okay. It's a very stressful day. It's a very red color day. All right. The market is very red today. Okay, with across the whole market, most of the counters they are down. I think we down more than 800 plus. Yesterday was down 500 plus counters. Today down 800 plus counters, and some of the key glove counters, key index components, they are down. Okay, so hopefully with today's section, it can. Yeah, Dave, it's a very sad day, Dave. Okay. Yeah, I also very sad lah. Okay. All right. So hopefully with the section today, I'm gonna able to help you guys to at least to try to look in the market in a different way. Okay, in a way whereby we can see if it is a potential bottom or not, and if yes, then it maybe can help you guys to react faster and also capture all this opportunity that comes in line with it. Okay, all right. So let's start the section today. Okay, right. So for those who are yet to know me or haven't attended to my section before, okay, let me introduce myself. My name is Alki. Okay, and I'm M Plus CMSRL dealer. Okay, I with M Plus since 2015, so it's coming to it's more than 6 years. But I started as a futures dealer with a very reputable Singapore company, and from there I explore what is all these equities, indexes, all these tradings when I was in PDT, proprietary day trading, and that was the time where I pick up all this knowledge, all these skills, and yeah, today I'm here to share with you all this knowledge that I have learned and I have picked up throughout this 9 years. Okay, so today the ideas that I'm going to share with you are just solely my opinions. Okay, these are some of the methods that I have been using, and it shouldn't be taken as investment advice lah. Okay, yeah. So let's start with the section today. Okay. Oh yeah. Today this section is a top fans reward campaign sections. Okay. If for those of you guys that following M Plus Online, our Facebook page, if you guys realize that we are having this campaign going on, which is called Top Fan Reward campaigns, and today we are having this quiz for the first 5 audience with top 5 batch that able to answer correctly my quiz at the end of the sections. Okay, so what you need to do is you just type the answer in the comment section, and for the first top fan that answer it correctly will be rewarded with a cash touch and go credit worth 100 ringgit, and for the rest 4 that answer this correctly also will get a credit worth of 50 ringgit. Okay, basically done. If you want to see if you are a top fan, it's very simple. You just look at your name, just right beside your name, it will actually have a symbol of the top fan. Okay, so don't worry if you are not a top fan today. Okay, because our campaign will last for months. Okay, it will last for a few months. If I'm not mistaken, it's 3 months. Okay, and if you're not top fan today, what you can do today is just comment, like our section, share out our videos, and attend as many as possible our webinars, and share it out. So eventually, very fast, you can be the top fan and engage with the next section. Okay, so every single webinar that we're gonna have for these 3 months, it might be one of the top fan reward webinar. Okay, so don't miss out any of our webinar. Yeah. Okay. All right. So let's start with the section today. Okay. So what I'm gonna covering today is basically I break it into 3 major parts. The very first part is I'm gonna revisit this thing called market cycle. Okay. After market cycle, we will be exploring some of the tools to identify the bottom, and lastly, how to trade the bottom using these tools after we identify the bottom. Okay. Before I start, okay, I say so many times before I start. So when I'm gonna start, okay. Before I start, I would like to ask many of you these questions. Do you guys know when the price has bottomed? Okay, or actually, when does the bottom happen? Any of you guys know? This question is not the top fan quiz question. All right, this is just a question that I would like you to ask yourself. do you actually know when the bottom happened? Okay, maybe you misinterpret this question as, do you know where is the lowest price? Okay, to be honest, I think only God knows when is the lowest price lah. Uh, Only God knows when is the lowest price, but we do. It's pretty much impossible for us to so accurately buy at the lowest price. But if we are talking about bottom, okay, if we are talking about bottom, meaning it's not the lowest, but the price is already bottoming and it start to move higher. All right. So when does we know that the price has really bottomed and start moving higher? The answer is we only know that the price has bottomed when the price started to move higher or already moved slightly higher. Okay, there's one time that I really lucky to buy at the bottom. Okay, I remember that stocks it was at 3 ringgit, and all of a sudden it dropped to 2 ringgit 60 cents. And due to some reason, I was buying that shares, okay, at 2 ringgit 60 cents. Okay, at 2 ringgit 60 cents. After I bought the shares within a week or two, the shares rebounded to 2 ringgit 80 cents. Wow. 1 to 2 weeks make 10%, 10+%. Okay lah, good return. Okay, sell. Sell saja. Okay. Sell saja. Then another week later is at 3 ringgit. After a year later, it was at 19 ringgit. Okay, so I really bought at the lowest, and I bought at the bottom. But I only know that I bought at the bottom when the price has really skyrocketed high. Okay, so whether if I know or not I bought at the lowest, that doesn't really help me a lot when I'm making my trading decision, when I'm making my decision to keep the shares or to sell for profit taking. Because the same thing also, I do not know where is the high. Okay. Yeah. Chunhao, if everyone can predict, everyone can be millionaire already. If I can predict, then I won't be sitting here already. Correct. Okay, but we do able to know that the price has bottomed out, because when the price started to move up, started to move into an uptrend, then we know that that one is the bottom. And it is okay if we are not buying at the bottom, but it is crucial for us to know that that is bottom, so that we can start engaging with the stock and buying into the uptrend. Okay, yeah, so that is the thing that I want to make it. Okay, that's the point that I want to make it clear for you guys. Is today I'm not gonna share with you how to buy at the lowest price. I'm not gonna. Okay, but what I'm gonna share with you today is how we can identify that this is a potential bottom, and when the signals to come in to ask us to buy, then we have a little bit more confident to buy it. Yeah, when the share price turn from bottom to uptrend, and we ride along with the trend. Okay, and that led us to the first topic that we're going to talk about today, which is the market cycle. Okay, based on this Wyckoff logic, the market has four phases, which is accumulation, markup, distribution, and also the markdown. Basically, where would we hope that we can always buy? We always hope that we can buy at this area, right? We always hope that we can buy at this area, whereby it's just the lowest, and the price after we bought, the price just shoot up and go shoot up like a rocket and never turn back, and then we can happily sit on our position and hold until the high, then we sell it to make all the profits right over here. But the fact is, it's pretty much unrealistic if we want to aim to buy at the lowest point right here every time. But what we can do is we can identify that it might be happening. The accumulation might already happened, and the price started to move into markup trend, into the upward rally. Then we can join in slightly higher than the lowest point, but still at the low part of the whole rally and trade along with it. Of course, if you want to do that, you need to attend two sections of mine. One is catch the bottom. The second one is sell at the high. Okay, but today we're just gonna talk about how to catch the bottom and how to buy one, how to identify the bottom and buy one is start moving higher into an uptrend. All right, okay, so we're gonna focus on that for today. Richard Wyckoff, he believed that the market always moves in 4 stages of market cycle that I was sharing with you guys just now. And the first one is accumulation. Accumulation itself is actually a sideways range whereby during this period of time, most of the retailers, they are not engaging. Why? It's because when during accumulation time, during the accumulation phase, the price is stagnant and the price is going nowhere. And if you're buying into this counter during the accumulation phase, basically you are seeing the counter is slipping right over there, and there's no fun, there's no hype, while everyone around you are making money, shouting, "Oh, up, up, up," or sell, make profit, money, profits, all this, while you're just waiting. So during this period of time, most of the retailers, they are not engaging because there's no fun. Whereby, for those who are buying, are mostly institutional traders or big players who are buying really carefully and skillfully, trying not to alert the market that they are accumulating the shares at this price, at the lower base. And once they are done, you will start seeing the volume start increasing. And from there, the share price will break out from the consolidation. Then you will see a lot of all these technical terms come in, breakout, triangle, flags, three white soldiers, all these things. Okay, and then it will gonna move uptrend, pull back, continue to break up, move higher, or shoot up. All this, yeah. Okay, and that is the markup phase that we have been engaging. And trying to get in. And when the price reached to a certain level, it could be a little bit too high for the retailers, for the traders, whereby they think, hey, I'm not confident to buy anymore. And that is the point where the uptrend started to lose momentum and it will enter another sideways range. If you're lucky, this sideways range will eventually turn into accumulations after a very small pullback, or it didn't even have pullback, going to accumulation and continue to go for another markup phase. If it is a really big long-term upward rally, okay. However, if it is more towards like Goring counter, what will happen is it might break lower and turn into a markdown phase, whereby small players, uninformed traders, they are stuck at the high and eventually they cut loss when they really feel the pain from their positions. And that built into the 4 stage of market cycle. And this market cycle, it will repeat over and over again, from accumulation to markup to distribution, markdown, and start all over again. Okay. So what does it, how do we relate it with our topic today? So how do we relate it is because our topic is to catch the bottom, right? Okay, our topic is to catch the bottom. So of course we want to look into the details, how we're able to identify that this counter is undergoing accumulations. So when we're able to identify that it might be undergoing accumulation, then this might be the bottom that we are looking at. So this right over here are some details for the accumulation. First thing, for accumulation phase, there is no specific time frame. The accumulation phase, it can last for 4 weeks, it can last for 8 weeks, it can last for 4 months, 8 months, it can last for 1 to 2 years. There is no specific time frame. And this is also the reason why retailers are very hard to engage along during this accumulation phase, because they do not know when the share price going to move. And they are suffering a lot of opportunity costs when they are stuck in the accumulation phase. Hence, I don't recommend you guys to engage in accumulation phase, but it's important to identify that this is accumulation phase and we gonna get ready. So when the share price start moving, the volume start kicking in, the trend start going into markup phase, then we can jump in and buy and make profit and get out from it. Okay, and of course, if you are a swing trader, you can ride on it lah. All right, okay. So like I said, during this period of time, the price action is likely to stay in range bound. It's likely to go sideways, going nowhere. So that's no fun when the price is range bound. And if you're trying to buy on the breakouts on the range bound every time, then you might have quite a few cut loss before the real move come. So it's really not easy to trade on the accumulation phase. And during this period of time, one criteria that can help us to identify the accumulation phase is the volume. We have to very much emphasize on the volume, whereby there could be a sudden surge in the volume from time to time. So let me show you some example. Mieko. Okay. You can see this rectangle box that I box it. Okay. You can see it is very obvious it's going on a sideways after a selling down from 7 to something cents to below 20 cents. And during this period of time, if you realize, we can see that there are all these spikes in the volume. And every time when there is a spike, then the next day they will sell down. Okay, after the spike, it's just sell down. So when you're trading this, you found it is really difficult, because every time you see, there's a movement on this counter, okay, I buy, then the next day sell down, I cut, then come again, I buy again, then you cut again. Eventually, you got really fed up. And then decided not to engage in this counter anymore. And quietly, it will start moving up and forming all this flag, all these pennants. You can see pennant, small flag, all this, and moving into the market phase. Once it break above the consolidation box. Okay. Similarly, on TAFE, for those active traders, I believe some of you guys might looking at TAFE. Okay, TAFE, you can see TAFE has been moving on sideways, between 15 to around 65 cents area, going nowhere. And every time where you see it just forming a good breakout, then immediately the selling coming, pressure down, good breakouts, twin towers selling breakdowns. Okay, you can see that happens so frequently, and you can identify the resistance for it. So when you see the price breakout from the range, and it consolidates with volume starting to increase. You can see when it break out from the range, starting volume to increase, or even right this range, volume starting to increase, not returning to the range, to this consolidation range and pressuring upwards, then that is the time where the rally take off. It has officially confirmed move into the market phase. Okay, this is where we're able to identify if there is accumulations on this counter or not. Okay, Vincent. Okay, I should show the current bottom one now. Okay, so one thing that I would, so just now you miss out what we were saying earlier. Okay, maybe you joined later. Okay, but we were saying that we only know the bottom when it has moved higher. Okay, maybe when it is trading right here or even right here, then only we know that this is the bottom. We do not know the bottom when it is forming the bottom. Okay, we wouldn't know that. Okay, all right. So that will be the accumulations. So if you're able to go through all the stocks and you find some of the counters, they have been slipping, going nowhere, and then on and off you see there is volume surging, okay, from time to time. That is the sign of accumulation. But when you're able to see that, call me, yeah. No, I'm just joking. Okay, seriously. But when you're able to see that, don't just jump in, because we do not know how long this accumulation phase gonna last. What we can do is we identify where is the support and resistance, the box that I drew just now. Okay, identify the box, the top part. Then what you do next is set a price alert. Set a price alert. So whenever it break higher, you know that it breaking out away from the box, and you want to go and check the charts to see if the volume is coming in or not, and if the price able to sustain above the resistance, which right now become the support, then you really want to be prepared to go in. Okay, when and that is the time where all this flags formation, all this moving average, all this thing will come in, parabolic, all this will come in and tell you to buy. Okay, and you will do slightly better than others because you know that this is accumulations and this is gonna be the starting of the market phase. So you will trade along with it, but you will always want to keep a portion of your funds, your position right over there to ride along the whole market phase, and that will able to help you to make maybe 50 to 70 or even 100 to 100% from the trade. Okay, so yeah, so this is how we can confirm the breakout of the accumulation phase. breaking out from the top part, the resistance, staying above. Okay, you can see this is breaking up, pull back, rebound again. This is one, this is a small one, and this is the big one. That it make the proper pullback, and it still stay above, and we are seeing all this volume are coming in. The volume should confirms that the price it is set to trade higher. Okay, and yeah, Ruku, how to set the price alert? Unfortunately, right now at our M Plus platform, you cannot set price alert, but you can use some free apps like KLSC Screener. You can set the price alert on your KLSC Screener. So when that triggered, then you will know it is triggered. You are notified. Then you will look into the charts. Or if you are hardworking enough, just spend a 5 to 10 minutes every night to go through all these counters. Okay, to check if it really break out from the range or not. Okay, all right, so next we're going to move to some tools to identify the bottom. Today I'm going to share with you guys 3 tools to identify the bottom. The first one that I'm going to share with you guys is divergence. It is price volume divergence, whereby we see the divergence in the price movement and also the volume, and there we identify it is the potential bottom. Next, I'm going to look into a momentum indicator, one of the most well-known and popularly used momentum indicator, and how we can use that momentum indicator to identify a potential turn in the trend. Last will be price chart patterns. There are various of reversal price chart patterns, and that will be really useful to help us to identify the bottom. So if you know that any of your friends are interested to know all this, please tag them and share to them. Help me, okay? I need to hit my KPI, and also help your friends, okay, to get more knowledge. Even though they can join, even if they can't join the section today, they can play back the video later. Okay, our video will have will be available on our Facebook website. Okay. All right. So let's start with the price volume divergence. So what is this price volume divergence? When we are talking about volume, volume is a very key thing when we are trading stocks. If you're trading forex, all this, you might not look at the volume, but when you trade stocks, volume is very crucial, because the volume itself, when trading stocks, it will be the key tools to confirm the trend. When the price is moving along with the main trend, the primary trend, we should see the volume increase. That would tell us that the buying interest is increasing, and people, the retailers, the traders are getting convinced and buying into the counter as well. And as of during the pullback period, the correction time, we should see the volume decrease. That would tell us that the price trend is still moving in a very healthy direction, whereby when the price pullback, they are not that many people are selling and get out from the positions. But many of them, they still believe that this stock can move higher, and they are still holding it. Retail traders are reluctant to sell during the correction. So if we see the volume increase when the price is moving along with the primary trend, the uptrend, and the volume decrease during the pullback, and that would tell us that the trend is likely to continue and move higher, and we should put on our seatbelt and sit tight and ride the trend. However, if the volume and the price have divergence, then that is the point that we're able to identify that there is a potential reversal. And that is the point that telling us that the momentum is slowing down already. Okay, so let's look at some example. If we look at Genitech, when Genitech was trading at somewhere around 5 to 6 ringgit, right now it's trading at 30 plus ringgit. If you look at Genitech, when Genitech was trading from 4 ringgit to 6 ringgit, although the price is trading higher, but if we look at the volume, it's very clear that we can see the volume, the average trading volume are declining. As the price moved from 1 ringgit plus to 6 ringgit within such a short time frame, it's normal that retailers, for those who participate this rally, for those who are holding the shares, they might be worried, because they might be worried anytime the share price can sell down. The share price has moved 4 times higher in less than 3 months. In less than 3 months' time. Okay. So that's why when the price is getting higher and higher, the number of engagement is getting lesser. So this is where the price volume divergence happen. The price is moving higher, the volume is going down. So whenever you see the break of the support, and that is where the selling kick in and go into a correction phase. Okay, and this is the top. So when we are looking on all this price volume divergence, it can help us to identify that this is a potential top. And if it break below the support for the topish price volume divergence, then that would tell us that this is the top. Similarly, on the bottom part, okay, AirAsia. Example for Asia. When we are selling on Asia from 1 ringgit 80 cents to 1 ringgit area, you can see the selling is so steep and the volume pick up along with the selling. However, when the price is selling from 1 ringgit all the way to 40 plus cents, okay, we are seeing the volume are decreasing. Because psychologically, for those who are holding the shares at 1 ringgit 80 cents, if they would like to cut loss, they would have already cut loss somewhere around here. Okay, when the price taking a dive. Okay, however, when the price is going so much lower from 1 ringgit 80 cents, many of them wouldn't be willing to cut already, because for them is I bought at 1 ringgit 80 cents, it dropped to 50 cents. Why I sell it? It has dropped more than 70% already. Might as well I just keep it. That mindset will come to most retailers. And that is the reason why when the selling going steeper and steeper in such a short time frame, the volume getting lesser. Okay, the volume getting lesser, you can see. All right. And eventually when we see the rebound, that is time whereby some of the short-term traders will come in and buy on technical rebounds. And that is how the price volume divergence will able to help us to capture the potential bottom. Next, price chart patterns. Basically, chart patterns, what chart pattern does is chart pattern, they put all this buying and selling into perspective by putting the supply and demand into a picture. Throughout chart patterns, it actually gave us the guideline to analyze whether the bull is winning or the bear is dominating. However, for many people, when they engage with chart pattern, what they do is they just merely memorizing it. Okay, but the beauty of chart patterns is not just memorizing and recalling what they generally forecast by Chad Specker in this book, Technical Analysis and Stock Market Profits. But if we able to identify and if we're able to identify the reading of the momentum into chart patterns, that would really help us a lot on not only on identify the chart pattern, but also able to give us confidence to call it a bottom and buy on the rebounds. Okay, so let's look at some of the chart patterns, and I will go through what do I mean right over here. There are a few types of chart patterns. One is continuation. They are continuation chart pattern, which we see like things like flag, pennant, triangle, rectangles, price channel. All these are continuation patterns. Meanwhile, when we are seeing some patterns like double top, double bottom, head and shoulders, okay, which rounding top, rounding bottom, all these are reversal chart pattern. And today, we're gonna just focus on reversal chart pattern. Because reversal chart pattern is the thing that we're gonna use to identify whether the price is hitting the bottom or not. First, we start with double bottom. I believe many of you guys right here are familiar with double bottom. Double bottom is one of the really popular and most commonly see chart patterns. Okay, Azizu, cup and handle is continuation. Cup and handle is continuations, whereby the cup is actually the rounding bottom and it formed the handle, the pullback, and it's continuation of the uptrend. So the cup and handle C and H is the continuation pattern. Okay, let's come back to double bottom. Double bottom, okay, double bottom is generally like a W shape and it is supported and rebounded from the previous low. So basically, you will see two low, and it start to rebound from the low itself. And sometimes you will see triple bottom, whereby you can see three bounce from the same low, and that would work pretty much similar with double bottom as well. The confirmation of double bottom, it will come when the price breakouts above the midpoint, which is the middle part, the W. Okay, the high of the middle point of the W. If we look at Heng Yuan, okay, if we look at Heng Yuan, we can see Heng Yuan was trading on a very strong downtrend from the year end of 2018 to all the way to begin early this year, end of last year, okay, 2020. The share price went as low as 2 ringgit something. And if we have a really carefully look into the chart pattern, we can actually identify a double bottom right over here. Okay, this is not a typical double bottom whereby you see a very steep selling, a strong rebound, and another selling coming in again, and the rebound. But for this one, we can see it is a selling that sustained for a very long time. It make a low and form a very strong rebound. Okay, you can see it's almost a V-shaped rebound right over here. And on the rebound, it still resisted along with the trend line. But this time, the selling got weakened. You can see the momentum got very slow. Okay, there is not much momentum on this selling especially when it approached the previous low, and this is shown through reading on the volume. The volume is so little at 2 ringgit something. Okay, and from here, when we see the reversal and rebound, okay, if you're trading on trend line, it's the break of the trend line. If you're trading on 20 days EMA, then it will be pretty much around here, because the turning crossing above the EMA will be somewhere around here. Okay, and that will be the bounce for the double bottom. And when we talk about the confirmation of double bottom, unfortunately, the confirmation of double bottom, it only comes when it break above the midpoint, which is right over here, the last high over here. Okay, the high of the middle point, okay, of the W. And you can see when it comes to this high right over here, the price actually took a pause for a day, and then continue break higher. So for those who are trading on double bottom, this is where you are jumping in for double bottom. Okay. Same thing on Heng Yuan. In early 2017, this is more like a typical double bottom that you guys can see. Okay, the selling, pullback, another selling. Okay, another selling is supported at the previous low, and we see the rebound moving higher. Okay, bounce out from the support, and that form into the W shape that we are talking about. And the confirmation, it will come when it rebound and break above the green line that marked right over here. Okay. Okay. Azizo is asking about breakout of the trend lines. Okay. Can we take the breakout of the downtrend line as a confirmation? When the breakout of the trend line, you of course can trade along with the breakout of the trend line. Why I say you can break out trading along with the trend line is because when we able to read the markets, that's why this comes back to what I was sharing earlier. The code that we are sharing earlier is, if you're able to read the market, read the momentum of the market, read the have that kind of market sense, that market feeling that I'm talking about. Read the momentum is no longer there, and you see a strong breakout of the downtrend line. You're able to identify that is the turn in the reversal. and you can jump in and buy even before it comes to the midpoint of the double bottom. Okay, and especially when what we are looking right over here on this double bottom is a huge double bottom. If we take from the top until right here, that is more than almost coming to it's more than 2 years already. Okay, so if you're trading in such a big time frame, you you are not able to just jump in right over here. So what you can rely on is you can rely on the break of the downtrend line or any other indicator that you're using. But the key thing right over here is we're able to identify that it formed the double support and it shows us the slowing in the momentum. The selling momentum is easing off with the low volume and the slope is getting flattening and rebound. Then there you can catch the bottom right over here. Otherwise, if you die follow double bottom, then your entry will be here. Okay, but you have to ask yourself, identify it as double bottom is more important or making money is more important. Okay. Kimbun, yeah, I know in the market there are some using RSI for divergence. Okay. In fact, I was planning initially I was planning to include RSI in the section today also, but I found that the content will be a little bit too overloaded. Even right now, we it's coming 45 minutes after the section already. Okay, so I didn't include RSI. RSI have RSI divergence as well, and you can look into that as well to look for the bottom. Okay, so this is the double bottom. Inverse head and shoulder. Okay, head and shoulder is not the shampoo. Head and shoulder itself is one of the well-known chart pattern, but it's not really that easy to find it in the chart, I would say. Basically, for head and shoulder, it has the inverse head and shoulder. It has a 3 troughs, with the middle trough, which is the head as the deepest one, and the 2 troughs beside it as the shoulder, which is shallower. Okay. Head and shoulder pattern itself is not complete. Okay, do take note this. The head and shoulder will not complete until the neckline resistance is broken. Later, I'm going to share with you guys how to identify the neckline resistance, but do be informed that when you see when you are seeing the three troughs, 3 low happening, it doesn't mean that it is a head and shoulder. You must see the rebound, and the rebound have to break the neckline resistance. Then only we can call this is the head and shoulder, inverse head and shoulder. Okay. And if we are looking into some example right over here, I have provide with you guys some of the example for head and shoulder. Heng Yuan as well. Okay. If we look at Heng Yuan, you can see the Heng Yuan have a very strong selling, attempt to rebound. Okay, the rebound was weak. We saw the hammer, it attempt to rebound after technical rebound, and another selling. But this time, although it broke lower and formed a lower low, but you can see the selling actually got easing off the selling momentum. Okay, the volume also getting lesser, and when it rebound, volume start picking up. Another selling forming the shadow, forming the shoulder, is also coming in a lower volume. As the price is rebounding and catching up, we can see the volume is picking up as well. And this is a good head and shoulder that we are talking about. If we can combine with the volume reading, and that would able to help us to increase the winning rate and help us to understand the chart pattern better. So we only know head and shoulder, we only can confirm the head and shoulder when the price rebound and break above the neckline. How do we draw the neckline? Is we connect the two high right over here, okay, draw a line, and that would be our neckline for head and shoulder. Similarly, on the hourly chart of FBM KLCI recently, we know that recently FBM KLCI has rebounded from below 1500 levels to all the way to above to 1600. Hit 1600 reversal and it went down. It came down until today. If we look into the hourly chart of FBM KLCI, we can actually see that this is a head and shoulder right over here, okay, with a smaller shoulder, smaller pullback, and the rally take off. Okay, you can see it on the daily chart as well. But the chart patterns itself, you can apply on all time frame. Okay, as long there is enough volatility, liquidity to trade. Okay, of course you cannot trade on the daily 1 minute chart of Malaysia's stock markets, equities charts, is because we do not have that kind of liquidity. But if you're trading others that volatile enough, then you can apply all this chart pattern on the 1 minute time frame as well. And if we connect the two high right over here, that would give us the neckline of the inverse head and shoulder. And that is the point to enter for a buy on the neckline breakout. The third one will be rounding bottom. Rounding bottom, it actually represents a long consolidation period. Okay, the price has gone through a very long consolidation period and eventually turned into a bullish bias. And rounding bottom is actually very much similar with the accumulation that we were discussing earlier, whereby the accumulation can happen during the long consolidation periods right over here. Okay, sign of accumulation might be cited. The bullish confirmation, it comes for the rounding bottom when the pattern breaks above the beginning of the decline, meaning you have to wait until the price rallied to the starting of the decline, then only it complete the rounding bottom patterns, and you're buying that this the share price gonna trade even higher from there. For example, like gabungan AQRS, okay, we can see the price selling down and went into sideways for 4 months. Okay, we can see the rounding, and during this period, we can see even the price is trading sideways. There are volume coming in. Okay, and as the price picking up, the volume is also increasing. Hence, the confirmation of the rounding bottom only comes when it breaks above the starting of the decline, which is right over here. And of course, if I tell you that you only buy right over here, you'll be telling, hey, okay, stupid, why I can buy here all this when the volume start increasing, start rebounding, I don't buy. Yes, you can buy, okay? Of course, you can buy. That's why we learn all this indicator so that we don't blindly follow the trigger point for the chart patterns. We use other indicator to help us to get into a better entry price. Okay, if you're buying right here, you have to sweat when the price pull back to your entry. But if you're buying here, you are comfortably sitting through the position. But the key thing is you need to identify that it is forming the rounding shape with accumulation spotted. Similarly, on Miyako, you can see the rounding and the rally, okay, after the breakout, pullback and rebreak above the decline. Okay, and in between, you can see all this volume happening, okay, despite the price was trading nowhere. All right, recently on Pharma, okay, Pharma, you can see as well, Pharma is a much shorter time, okay, time horizon, okay. You can see the rounding supported. And for pharma wise, we don't see strong volume. Okay, we don't see a very obvious volume right over here. It might be because the volume got too small when the volume spiked later. Okay, because we can see here got some green bar over here, some longer bar over here. Okay, but we can see after the breakouts, the price just shoot up. Okay. Last but not least will be the falling wedge. Falling wedge is one of the most difficult chart patterns to accurately recognize. And falling wedge itself, some they would even teach you that falling wedge can be used for continuation, and yes, it can be for continuations. But what we are looking today will be falling wedge for a reversal. How we use the falling wedge right here is we try to support the decrease in the downside momentum, the selling momentum, and look for a trend reversal. How do we identify the falling wedge? Is it begins with the white at the top, and eventually when the price moves lower, it gets narrow, and it forms into a cone that slope down. Okay, Haika, Daniel. Okay, past stack. If we have time later, we can look into past stack. Haika, Daniel is telling us that past stack is going on a falling wedge, and he is our top fans. Okay, all right. Happy to see one top fans right over here. Okay, for those who are not top fan, share more, comment more. Yeah, all right. Okay. The bullish bias on the falling wedge only come when the resistance breakout occurs. Okay, so if we look at Asia wise, you can see Asia was going on the downtrend, but if we connect the low, you can see it is like a cone. Okay, it's just squeeze, getting narrow, and the breakout. Okay, so when the breakout happens and that confirms the falling wedge. Unfortunately, this breakout you can't trade because it's a gap up. You only can trade after the pullback and rebreak at 72 cents plus. Okay, and it rallied to 1 ringgit. The next one will be Aeon. Aeon, we can see also if we connect the top, the high, we connect the low. Okay, you can see the range got narrower when it comes to when the price gone lower, and we see the rebound. Okay, the rebound with the volume, and it trades higher from there. Okay, so this is how we can identify the falling wedge. So up to right now, we finished on the chart patterns. Next, we're going to move on the next one, which is MACD, the momentum indicator that I'm going to share with you guys. So MACD itself, some of them, they call it MACD. It is actually standing for moving average convergence divergence. Okay. So basically, the the basic of MACD is it used two moving average line to form into a momentum oscillator, which give us where is the trend and all these momentum signals. Okay, so for those who are not familiar with MACD, basically MACD is right over here. Okay, this is MACD, and there are three components. Basically, you can only focus on two components, which is the MACD line. Okay, MACD line is basically subtracting the long-term EMA from a short-term EMA. Okay, the typical setup that they use is 12 days and 26 days. Okay, while the signal lines, it itself is the 9 days of the MACD line. So basically, the function of signal lines is to help us to identify all these turns, all this crossover. Okay, so when the MACD line trade below the signal line, then it is going into a downtrend. It's more towards the selling part. When it move higher, means the buying momentum is in. Okay, and the last one is the histogram, which is the difference of the MACD and also its signal line. Okay, but today we are not focusing on the on all this crossover, all this thing, but we are focusing on the bullish divergence. I chose MACD over RSI for the divergence part is because personally I'm more I use MACD more frequently, and MACD is a trend following indicator rather than RSI is range is more suitable for range trading. Okay. Usually MACD it moves in line with the price direction when the momentum is strong. And what we are looking at right over here is when the price is forming a lower low, because like I said, MACD always move in tandem. So when the share price is moving lower, MACD should be heading lower. Okay, it should be forming a lower low as well. But when MACD is forming higher low and the price is forming a lower low, that is where the bullish divergence happens. A higher low on MACD itself suggests a lesser downside momentum. Okay, so let's look into some of the example. For FIHB, we can see for FIHB wise, although the share price has been continuing to trade lower, but what we are seeing right over here is we can see that the price is the MACD is forming a higher low right over here, and that is bullish divergence that we are talking about. Okay, you can see right over here, even though the price is trading lower, but it formed tail and the volume is very little. Hence, the momentum, the selling momentum is actually much weakened. So when we see bullish divergence, we can prepare that this might be a potential reversal in the trend. Okay, and what do we see right over here is the rally consolidations. Okay, if the price continue break on and go higher, then this will be the bottom that we are talking about. Yeah, so just now Vincent is asking about some current one, and this is one of the current one that I'm looking at, FIHP. Okay, Maybank. Okay, if you look at Maybank, you can see when Maybank early on was selling lower, you can see when the price is trending lower, the MACD is trading lower as well. However, during the later part in September to early December, we can into November, we can see the volume getting lesser. Okay, average volume getting lesser, and also the low is getting flattening as well. Meanwhile, the momentum, the MACD low is picking up, is forming a higher low. That gives us the MACD bullish divergence. And when the breakout happened, we see the rally. Okay. Similarly, on Top Glove. Okay, for those who are holding Top Glove, sorry, but we are talking about Top Glove right over here. Okay. Yeah, I know the price is getting lower today. All right, over here. Okay, if we look at Top Glove, actually, although the price dropped from 9 ringgit something all the way to 3 ringgit something, in between there are a few MACD bearish divergence that we can see. Okay, first of it, we can see in November to early of December this year. Okay, when the price is trading lower, but we are seeing the MACD is forming a higher low, and that is where we see the short-term rebound from 4 ringgit something to 6 ringgit. And later on, we do see another lower low, but MACD still forming a higher low over here. And from there, we are seeing the price rebound from 4 ringgit 40 cents all the way to 5 ringgit 60 cents area. Okay. And what do we see right now is the price is forming a low, it's forming a lower low, but we are yet to see the MACD to go down lower below this low lah. Okay, still some distance. So if we do see a strong rebound right over here, then MACD will turn up, and that will be another MACD bullish divergence signal as well. Okay. However, if the selling is very strong, continue to head lower, then we will see the MACD to turn down, and it will form into a lower low, which in line to tell us that the selling momentum is strong. Okay, so do watch out Top Glove if you see any strong bullish momentum, bullish reversal, and also if there is any bullish MACD divergence. Okay. Last but not least is the Gamuda. Okay. The last example will be Gamuda. Okay. If we look at last year, May to July, mid of July, we can see Gamuda continue to trade lower with a lower low. And during this period of time, the MACD low is pretty much flat or slightly lower. Okay. But eventually, when it comes near to the, sorry, not last year, this year, okay, when it comes to into August, when the relaxation XOP, all this thing is happening, we can see although it's selling down, but the momentum is lesser ready for the selling. Okay, the share price has dropped from 4 ringgit all the way to 2 ringgit something, almost more than 50%. And eventually, during this period of time, the sellers got those who are holding it, they are no longer selling. Those who wanted to sell, they sold it earlier during this period of time. Okay. And eventually, with this bullish MACD divergence, we see the rebound in Gamuda. Okay. So we have talked so much about how to identify all this, bottoms, all these chart patterns, all this MACD, all this thing, how to look at it. Then how actually we can trade it. As what I was sharing just now, you can trade using your trend line, MACD, all this thing after you spot a potential bottom. But today I'm gonna share with you all two methods to do it. One of it is look for reversal candlestick. For me, reversal candlestick is very crucial. It's very crucial, whereby it will help me to dictate whether this this rebound from the bottom, is it strong or not. Okay, so when I'm trading or calling it as a bottom, I would really want to look for strong bullish reversal signal, like bullish engulfing, like morning star, like piercing line, all this. These three are the one that I always rely on. Okay, so this is how bullish engulfing looks like, the morning stars and also the piercing line. So for those who are not familiar with reversal candlesticks, or you cannot remember too many candlestick pattern, you might want to take a picture of this and remember these three. Okay, and these three would be quite sufficient, quite good enough to use, right? Okay, so if we look at some of the previous example, like Asia, we can detect the price volume divergence right over here. Okay, and eventually we are able to see a bullish divergence, a very strong bullish engulfing happening right over here to tell us that this is where the technical rebound starts. Okay. Similarly on Gamuda, okay, after we're able to detect the MACD divergence is happening, we're able to find our entry using the bullish reversal signal on the bullish engulfing as well, right over here. Okay, right, okay. So if we look at the earlier part, whereby the divergence is not obvious, we can actually also see there is a reversal right over here. Okay, a morning star rebounds. However, it doesn't sustain. It's just one day show and then drop back. Okay, so if you're entering on this morning star right over here, your stop will be at the low. If it breaks below the low, then we know that it's strong. We need to cut loss. If you cut right over here, then you are buying better on this rebound at a lower price, and you do not need to suffer this pullback. On double bottom that we are looking at earlier on, we can see it formed a very strong morning star and a long green candle breaking above. Okay, so this is the morning star we're looking at. If you're trading double bottom, head and shoulders, and you're able to identify the key reversal signals, and that would be a very good one for you to consider to enter on the reversal signal with a limited losses and on a very rewarding upside. Okay. Similarly, on rounding bottom, we can see when rounding bottom is forming, okay, before it hits the high of the starting of the decline, we can see in between it actually have a pullback and forming a morning star right over here. And if you're trading moving average, then that would be the moving average line lying right over there. Okay. Uh, don't ask me why I think that there is a moving average line over here. Okay. Maybe I can draw the chart lah. Okay. For those who are using the 20 days MA rebound method that I have been sharing, you can check. Okay, this is where the MA rebound signal happening. Okay, it should have a. I think it has a MA rebound line right over here for the MA rebound. The second method that I'm gonna share tonight is the MACD centerline crossover. This is not this is one lazy method that you can look into for the change in trend, and it's advisable more towards swing trading. MACD centerline crossover, it happens when the MACD line it move from the lower region, negative region, to positive. It crossed the center line, moving above the zero to turn positive. But like I said, it is more suitable for swing trading because it is a major change in the trend. So if we look at some of the example like FIHP, after we detect the divergence happening, eventually the entry will come in when after the divergence and the price start moving above the center line right over here, which is this candle breakout. Okay, so you can combine with the price breakout, reversal breakout to enter for this MACD divergence. Okay, similarly on Maybank that we look into just now, the MACD move into the above the zero levels when the buying coming in and break above the previous high and continue to trade higher. Next, we have Top Glove. Okay, we have Top Glove. After the divergence, the price, the MACD travel and then move above the zero line. Unfortunately, as it moved above, it was the high. Okay, so it was the high. Then what do we do is we can cut when the price moves back below the zero. Okay, because the momentum doesn't sustain and reverse, and that is where we need to cut it. Okay, and if you're unwilling to cut, the worst that you need to cut is on the last low that you are seeing. And for the second bullish divergence, MACD bullish divergence, where we see the MACD line cross above is right over here. Okay, and the price travel a little bit higher before the selling down to 5 ringgit 60 cents. As for Gamuda wise, we can see we do see the MACD crossing above the zero lines when it was breaking above the 3 ringgit levels with a long green bar, and price continued to travel to 3 ringgit 30 cents area. Okay, this resistance after moving above the MACD center line. All right. Hence, if in summary, if we look through what we have discussed today, is we have looked into how we can choose how we can pick up all these bottoming chart formations, bottoming counters. Is first is look into accumulations, from accumulation to markup. Then we can also utilize price volume divergence to tell that the momentum is slowing down and it might turning into an uptrend. Bullish reversal chart patterns, and also MACD bullish divergence. So one common characteristic that all these methods they share is they are all trying to spot when the selling momentum has slowed down. Okay, so if you're able to, if you have other methods that help you to identify the selling momentum slowdown, then you can also use all these methods that I was sharing below. Look for the bullish reverse candlestick, look for the MACD centerline crossover for the change in the trend, or the 20 EMA rebound method that I have been teaching and sharing to many of my students and also my clients. Okay, so that will be what we have covered today, and I really hope that you guys enjoy it and able to help you to trade this market. Okay, and we are not finished yet. Now, right now, we here comes our quiz sections for today. Okay, so the question is very simple. How long usually does the accumulation phase takes? A, 4 to 8 weeks. B, 4 to 8 months. C, 1 to 2 years. Or D, there's no specific timeline. So for those of you right over here, do comment your answer right over. Comment your answer, and our my assistants will find the first top fan that answer to that make the correct answer, and share it later. Okay, we will announce who are the winners later, and then we will give out the prize. Okay, so this is the questions. Okay, so how long does the accumulation phase take? Wow, so many of you right over here say D. Really D, the answer? I don't see any other answer also. It seems like D is the correct answer. Okay, so okay. Meanwhile, we are waiting for this quiz. Any questions? Any of you guys? If you have questions, you can put it right over here. Okay. If you have questions, you can put it right over here. Then we can look into. I can help to answer some of your questions. Okay. Earlier on, Encik Mohammed No Ismail asking if there is any screener to detect divergence. Yeah, I think that there are some screener in the market to design to detect divergence. Okay, but I couldn't recall. Normally, I use my eyeball to look at it lah, because when I look into divergence, I would want to look into how the volume how the volume it goes, whether there is any bullish reversal signals or not. It's the candles to have a more better gauge of the momentum of the markets. Okay. Danny is asking, Gamuda have any sign of weakness now? Okay, if you look at the Gamuda charts, okay, if you look at Gamuda charts, let's look at Gamuda. Okay, you can see Gamuda. Gamuda, I would say that this is a temporary reversal signal for the Gamuda. Okay, and as it is approaching near the 20 days moving average, we might see some some support right over here for Gamuda. Okay, and especially it's approaching the 3 ringgit support levels. Okay, as the recovery team remains focused, we might see Gamuda to hold at around 3 ringgit levels. Okay, Jeff is asking, is there any tools able to scan and filter out stocks meeting these bullish reversal patterns? Yeah, I think there's a lot in the markets. Some of them, like TradingView, also got, if I'm not mistaken, TradingView and some paid chat system in the markets. Okay, and our M Plus Wish Pro alerts, like some of these bias intact, pullback rebounds, all these things we do couple in the reversal signals as well. Okay, to get the signals lah, good signals. Okay. Okay. All right. Okay. Jerome very confident number still adi. Okay. Uh Dave is asking about Sapura. Okay. Uh I'm not gonna go through too many counters today. Okay. Okay, for Sapura Energy, if we look at it, it's more towards trading sideways. Okay, it's more towards trading sideways. In fact, it is trading higher low. Okay, we can see higher low right over here. Okay, basically just sideways, I would say. Okay, uh, you can see when it's sideways, MACD line moving above the center line, and then it come back down. Okay, so that's why we need to couple with divergence, and in order to have a better signals on the center line. Okay, Rezon is asking about can I briefly explain RSI versus MACD? Okay, the key difference that I would say about between RSI and MACD is RSI is more suitable for range trading. Okay, range trading, while the MACD is a trend following indicator. That is one of the key difference between RSI and MACD. Okay, yeah. Okay, Alba is asking about how to use accumulation distribution on M plus. My colleague Zoe, she actually had a webinar section about accumulation and distributions on our Facebook. Um, I think just last week or last 2 weeks. You can play back the video from our Facebook video, okay, and in our Facebook page under video. Yeah, you can play back and then listen to her method, how she actually used the accumulation and distribution indicator right over here. Okay, there is an indicator accumulation distributions. Inchimadi asking if it is applicable to warrant stocks. Okay, this is a very tricky question. Okay, because if you warrant have its chart also, and of course you can, the chart reading are pretty much the same. But for warrant, we need to know that the warrant, the price, the key mover for the warrant price is the movement of the mother share. So normally when I trade the warrant, is I will definitely analyze on the market mother first, and then when I analyze the warrant, I'm not looking at the price at the charts, but I'm looking if the warrant is at a good price or the warrant price is too expensive. Okay, yeah. So I will base on the mother chart to determine whether the warrant gonna go into which directions. And of course, there are many other things that we need to take into account for warrant, like the expiry time, the exercise price, all this. Okay. Malay, for MACD, I'm using the typical setting, the 1226. Rubberex broke yellow today. Will it will be dropping further? Okay, for glove counters, it's trading on downtrend. Okay, and it might drop further. It might rebound. Okay, the chances of it going lower is higher lah, because it's along with the downtrend. Okay, but I cannot tell for sure because I'm not God. All right. Okay. So yeah, but it is on downtrend, so downtrend the chances of going lower is higher. Okay, Moss is asking about Wong, and Wong is forming a bearish engulfing. Okay, Wong is definitely all these are bearish candlestick. Okay, how do I relate that to MACD? Okay, there's no signal from the MACD. Okay, we do not see like any bearish divergence signal at this point. Okay, what we are seeing is the MACD line is near for a crossing down, so it's likely to have a little bit retracement. So next tomorrow, if Wong selling lower a little bit, then we should see the crossing below the signal line for MACD, and that's a little bit more bearish signal. Okay. Okay. AD is asking Johotin. Johotin is good example for bottom fishing. So let's look at Johotin. Johotin changed name already. What's the name for Johotin already? Uh, Johotin. Old man cannot remember the new name. Okay. Yeah, able. Okay. Okay. Yep. If we look at Johotin, okay. If we look at Johotin, what we are seeing on Johotin is you can see Johotin is going on a slightly lower low, okay, but we are seeing a higher low right over here, and we are seeing the MACD moving moving into the positive region over here, okay, at 1.50 something. It make a pullback, sit on the MA rebound and rebreak, move higher. Okay, yeah. So this is a really good example, Eddie. Thank you for the example. Okay. Okay, let me take another few questions. Then we have to end the section today. Okay, Danny is asking about what is range trading. Range trading means the price is trading on range bound. Okay, so if let's say if you're seeing the price is trading, for example, right over here. Oh, sorry, range. Okay, this is like range bound. Okay, when you're trading doing range trading, so whenever it comes to the near to the low, okay, near to the low, then you buy at the low, and whenever it comes to the near to the high, then you sell. So you're making the money from out of this range, 1 ringgit 33 cents, and then you sell whenever it comes near to 1 ringgit 45 cents and above. Okay, so you buy at the support, you sell at the high. Okay, but when it break out further, then you don't have any position right over here. Then you have to switch into the trend trading modes. Okay. Mr. Chant. Mr. Chan asked a very interesting question. How many years of experience can we depend on technical analysis to correct predict the trend? Okay. I was a prop traders. I was a prop traders. When we were a prop, when we were prop traders. Guess how long that we trained before we can start trading. We were trained for 2 months. Then we start to use the company fund to trade the markets. But of course, that 2 months is very intensive one. Every day we are looking more than almost 1,000 charts every day. Okay, yeah, it's almost 1,000 charts every day. Okay, yeah. So during that 2 months, really, during that 2 months, um, we will be switching, flipping from one chart to another chart, and then learning and reading the markets. So if you put enough efforts, then you don't really need to take that long time to learn. Okay, yep. And that's how I was teaching some of my juniors how to read the charts in the correct way. Okay, the correct way, and also how to practice it we don't wait every day to read a chart now. We flip back historical charts, we go through it, okay? We go through it, okay? Okay. Let's look if there is any other questions. Range trade. So Danny, no. Range trading is not swing trading. Swing trading is you trade the swing following the trend, but the range trading is you trading within the range itself. Okay, it hit the support you buy. When it go to the top you sell. When it's trading within a box, you can see this is like trading within a box. Okay, so whenever it comes to the low, then you buy. It rebound to the high, then you sell. And when if you put in a RSI, then it looks very good because every time it come to near to the low, you can see it come to below to the RSI, below to the RSI. Then you're gonna buy. Okay, when it rebound go higher, then you sell. Okay, you buy, rebound, then you sell. Okay. So that is range trading. That's why I say RSI. For me, RSI is more suitable for range trading. Okay. While if you want to do swing trading wise, it's more for the it's more towards the um, momentum or this thing. Okay. Uh, okay. Since we don't have too many top fans right over here today, so our quiz will open up for those who help to share this webinar. Okay, you'll be sent a chance to win the prize also. Okay, for those who are still here, so do share the video out. Okay, for today, and very soon my assistant will announce who is the winner for the session today. Okay, so do share it out right now, and my assistants will pick who will be the winner, and you might be one of the 5 of the winner today. Okay. Yeah. Meanwhile, I'm gonna take a little bit more questions. Okay. Inche1 Ezat is asking if K power is in accumulation phase. Okay. If we look at K power, okay, so this is one thing. One thing about one thing about accumulation phase. It's very hard to trade in accumulation phase because we can see that okay every time it rebound, it being pressured down, rebound, pressure down, and there are volume. Okay, they are volume, and it yes it can be okay, but we do not know how long this accumulation phase gonna last, and we can only know when to enter is when it start to break out from this range over here, sits, stay above the range, re-break with high volume, then that is where we want to jump in for a very fast trading. Okay, at this point if you jump in and buy, okay, I do not know how long it can take. And one thing about accumulation is there is also market cycle for the downward trend. Okay, markdowns, okay, selling, accumulations, selling again. Then distribution will be the distributions, rebounds, accumulation again. Okay, it's a little bit difficult to explain it right here, but it's like a reversal cycle. Okay, we have been talking about the cycle for the uptrend, accumulations, markup, distribution, markdown. So the reversal will be the markdown, and then the distribution, then markup, the rebounds, technical rebounds, and accumulation cycle again, and then markdown again. Okay, so it might extend the trend downwards. Okay, that stands a chance. So I do not recommend to just jump in when you see this is a potential accumulation because you do not know whether when it break it's gonna go lower or it's gonna go up. Okay, and if we able to, it's better if we identify the accumulation and rebound sit above the range and re-break higher, then that will be a better chance of winning. Okay. Andrew, yes, I have another section. Oh, okay, another section for catching top. If you guys really like it to want to know about how to catch the top, then I will definitely arrange for you guys. Okay. If you guys really love it, lah. Okay, so leave your comments if you want me to do the catching top. If there's enough feedback and there's really a lot of people wants it, then we're gonna have the second half of these sections. Today we catch the bottom, then we catch the top. Okay. What is the topic of my next event? Next week I will have repeat this section but in Mandarin, and that will be my next seminar. Okay. For swing trading, which alert to filter potential counter at WIS M plus. For our WIS lines, normally I would okay, if for our alerts, if you're doing for swing trading wise, it would be for MA rebounds, momentum bites, squeeze breakout as well, pullback rebound also. Okay, if you are using WIS light wise, you can look into all this like MA20 as support in uptrend, MA50 as support in the uptrends. Okay, as well. All right. Okay. Okay. All right. Okay. So before we end the sections, we have the winners. Okay. So let's look at who are the winners for today's campaign. Okay, this is the drum roll time while we are waiting for the winners. Okay, so the winner will be Inche Hakau Daniel. Okay, congratulations Daniel. You are the top winners for the 100 ringgit touch and go credit. Okay, and then we also have Jennifer, Tapa, Mr. Lee Wing An, and also Mr. Lee Wei Chik. Okay, to win our 50 ringgit touch and go credit voucher. So a consent note will be shared with all the winners for today to participate this campaign via Facebook Messenger, and all the winners, you guys need to send back the consent note to us within the 7 days. Okay, and for you guys that win, you must have Touch and Go e-wallet application installed prior to receive the prize. Yeah. Okay. So congratulations to 5 of our winners today, and thank you very much for joining the section today. And if you want to get more all these events and get notified about our events, do remember to like and follow our section, and do attend to our sections more often to become the top fans. Then you are the next one to win the 100 ringgit touch and go credit prize. All right. Okay, that will be the end of the section for today. Thank you very much for spending your time with us, and I wish you have a very good night. Okay, thank you.